GE is getting a boost after the company raised its full-year outlook as results beat the street. Strong demand for jet engines is a big part of the story here. GE's aerospace unit saw a 37% rise in orders as it recovers from the pandemic lows. Brian Langenberg of Langenberg and Company Principal joins us now. Brian, good to see you here this morning. Look, I think investors have only known GE the past 3 years to be an outright dog, but you pull up this earnings release, you have total orders, organic orders up 58%, and they're raising the top end of their earnings guidance by 30 cents. What in the world is going on here?
Well, it's no longer a dog. The stock is, finally started to act well over the last year or so. And there was a period of time much longer than 3 years where the wool was pulled from everyone's eyes. I mean, going back over a decade. But once Larry Culp came in a few years ago, those of us who had known Larry before he was Larry knew that this was going to be a fix. It wasn't going to be a quick fix, wasn't going to be any kind of overpromise, underdeliver, and that he would take a methodical approach to what needs to happen at the company. And that's what's happening. Now, in terms of the orders, aerospace, demand is demand. The Paris Air Show is extremely strong. Everybody is getting orders. So, they obviously benefit from that. But also, if you think about it, as they break the company up and they spin it off, you don't do that spin until you can provide some good results, some good tailwind, pun intended, for the major business units. So, I sound like a little bit of a cheerleader here, but it's everything that the top line would suggest.
And to your point, we've got the spin coming next year for Vernova, as they have dubbed it, which is power generation, renewable energy. So how should investors be thinking about, we also, by the way, had GE Healthcare report. How should investors be thinking about the various component parts here and what is most attractive, or which asset has what attributes that they should be aware of?
Great. So the premier franchise of all of these is aerospace. Okay. The healthcare business is also very good business. That's pretty much being spun. But the aerospace asset is the key asset. When you took a look at something, I wish I could have a job just being paid to come up with these stupid names for new companies. I'm just telling you.
Well, you don't like Vernova, Brian? Vernova's kind of cool, no?
I don't know.
It's not.
Vernova,
I don't care.
Vivendi, Mondelez. We have a nice list of these kinds of things. This is
nothing new.
Right.
This is nothing new. Little segue into aerospace. Textron was a textile company in New England. And somewhere in the late 50s, early 60s, someone said, if you put a Tron on it, you'll get a higher multiple. So this is nothing new. But in terms of more substantive analysis.
Hey, Larry Culp. Hey, Larry, if you're listening, GE.AI. Maybe that's the way to go.
Yeah. Well, the thing is, he's a leader. He's not a fad chaser. And that's, fad chasing is what dogged the old General Electric. Blocking, tackling, pursuing excellence is what you have now. So to come back to your question, aerospace is the best franchise of these. You start talking about power and renewable. Obviously, large franchises, are they as attractive? I don't think so. But they're good businesses, and by themselves, they can pursue their own strategies. And the nice thing about when a business has been locked in a large conglomerate for a long time and had underachieved for a while is, when a business is on its own, whoever's running that business has to answer to the whole market, not just a corporate. So it's a positive development for all those businesses. I think aerospace is the best one of the three. But they should all do better on their own.
I want to turn to another conglomerate that is more in a challenged place right now, I think safe to say, and that is 3M. The company is just overshadowed with legal liabilities, both from the so-called forever chemicals and from some military stuff as well. That said, they beat estimates. So, it doesn't seem like it's a free and clear situation here, but investors seem to be happy about the numbers today.
Yeah, they're happy about the numbers today. And just stepping back on 3M, 5 years ago, 4 years ago, 3 years ago, this was looked at by the street, including myself, as just being a premier company, very well-run business, outstanding in operations, and really what they are is a specialty chemical company on steroids for the most part. And they've always been very good at make it by the inch, sell, or make it by the mile, sell it by the inch. And if you go in the facilities, the way they run them, they really focus on that. But you always had a lawsuit here, a lawsuit there. And I'm not a legal analyst. I don't know of anybody that got on the legal thing early and said, wow, this is going to blow up. But it did. Okay. So to frame this, if you pretend for a minute there was no legal issue or nothing had come up, this is a company where the stock should be worth at least $200 million. Now, the talk is around about up to $20 billion of total liability. There's some bid asked around that. Well, that's $40 a share, $40 a share. So take that 200, subtract $40, you still have intrinsic value of about $160. So are you going to get that today or tomorrow? No. Think of 3M as a beauty pageant winner that's got some mud on her, and you got to account for it, but she's going to come out of this. Okay? That's how I see this playing out. It's going to take a while.
Those words, Brian, not mine. Before I let you go, as someone that has a lot of experience.
I am my own HR department. So.
As someone that knows a lot about industrials, now that we got GE, now that we got 3M, what is your favorite stock to own in industrials?
At this exact precise moment, and I have a hold rating on it, okay? So this is not a ratings change, but, they told us, oops, we got a problem with some of our engines. It's going to cost $500 million. And at this precise moment, the market has taken about $19 billion out of the market cap. So $500 million, problem, $19 billion out of the equity market value. Now, if there's another shoe to drop, obviously that analysis has to get modified. But I'm just looking at that and going, unless Pratt & Whitney has forgotten how to build aircraft engines, might be a bit of an overreaction. All right, otherwise, the only other name I focused on is Boeing, and it's simple math. Their commercial aviation or commercial, and aircraft had gone from $60 billion in revenue to a low of under $20 billion. And when 60% of your sales are going to triple over the next few years just to recover to where they were, that can't not work.
Really helpful analysis on a busy morning, Brian. Real good stuff here. Brian Langenberg
Pleasure.
and Company Principal. Good to see you. Talk to you soon.